bring in Stevens analyst Joshua along. Joshua, want to get your thoughts on what we've heard, or at least what we've seen in the results so far from the company, including the same-store sales of 7.4%, which for many other companies might be considered good, but here was a miss.
Absolutely. So what we're seeing here is still a very strong brand, although same-store sales came in a little bit lighter than what everyone expected, and including the 3Q guide here, maybe disappointed. I think the key point is that it's still transaction-led. This is an amazing brand with a lot of power, brand consumers that really want to be here. So at the end of the day, although those top line came in below expectations, if you look at the margins, that's really where the story is here. They're going to focus on throughput and really be able to still drive higher EPS.
Still higher than it was at the start of April, I guess. Does this make you more cautious on McDonald's tomorrow morning?
Great question. I think at the end of the day, no. I think you're still going to see a lot of momentum in these large cap limited service names. We actually took our numbers up into the print. There's a lot of momentum at McDonald's as well. They've been hitting home run after home run with the recent marketing initiatives that they've been going through. And I don't know if you spend any time out here, but lines around the block at every drive-thru I go through. So I think there's still going to be room for upside there on the top line. And the big question is just how this plays out over the course of the year. And that's something that we're talking through with our clients across the group as well.
Yeah, I would say McDonald's has been benefiting as well from high inflation and folks looking for affordability when it comes to going out and eating. Chipotle has been a little bit of a different story because they've had price hike upon price hike upon price hike. And I realized that last quarter, Brian Niccol, the CEO, had suggested that maybe they were through the most of that or the worst of that in terms of trying to offset higher costs and inflation. But is it safe to say, given the top line miss, that maybe we're seeing a little bit of consumer pushback in terms of how high those prices have gone so far?
That's a fair point, but I think really when we get into it, and obviously the conference call is ongoing right now, I think when we dig into it, we're going to see very strong traffic trends, and really this miss on the top line, albeit small, is going to be a function of just the price getting cut in half. So think back to 1Q, Chipotle had about 10% price in place. That was at the higher end of where they've been historically. Inflation's really come down across the board, across key inputs like avocados, cheese, dairy, beans, et cetera. We think that that's going to continue to play out. And so that's really driving the strategy of allowing some of that price to roll off. So here in the 2Q period, they had about 5% price. That's a meaningful step down versus where they have been and headed in the right way. So at least now, if inflation holds in where we expect it to, that value proposition can really hold tight as price falls off over the course of the year, and comps are still going to be transaction driven.